everyone. We spend so much time analyzing stocks, mutual funds, investments, but one crucial aspect of our life that we often ignore is health insurance. I always say that even before you invest your money, the first step is to take the right health insurance. Simply because it takes one medical emergency to wipe out your years of return in a single night. That is not just about taking health insurance, it's about taking the right health insurance. Recently, someone from my extended circle landed in the hospital due to a sudden infection. A young fit person in the early 30s. And you won't believe he ended up with a bill of 1.8 lakh rupee for 3-day treatment. And here is the crazy part. He had health insurance but only 3 lakh cover taken a few years ago. He did not even review it and was clueless about his insurance benefit. As a result, he ended up paying half the bill from his own pocket. Now this is the most common problem with Indians. Either we don't take health insurance, or if we have it, we don't have a right health plan. So in this video, I have created an ultimate guide for health insurance for 2026, where we will discuss every aspect of health insurance in a very simple, practical and no-nonsense way. In this guide, we will discuss how much health insurance cover do you actually need, how to shortlist the right health insurer, then features you must check before buying them, then two very important questions I want to answer. First is health insurance for parents, and second is company provided insurance enough? Alright, let's get started. Before we shortlist a health plan, the first question we need to answer is how much health cover is good enough? Most people still think that 5 lakh is enough, but the reality is 2026 is very different. A single hospitalization in a metro city today can easily cost 5-6 lakh rupee. So if you live in a metro city, you should have a minimum base cover of 5 to 10 lakh rupee. If you are from tier 2 to 3 city, you can have a minimum base cover of 5 to 7 lakh. Now if you have a family with a wife or kid, you don't need to take individual health plan. You can take a family floater health plan with base cover of rupees 10 lakh and opt for a super top-up plan. Here I want to focus on this super top-up health plan. Not many people understand its importance. Basically, super top-up activates after your base health cover is exhausted. For instance, let's say you have taken a health plan with 10 lakh base cover. While this is good enough in majority of cases, what if there is a serious health problem? One bad surgery can cost 15 to 20 lakh rupee. Now if you simply take a health plan with a coverage of 20-25 lakh rupee, the premiums would be very costly. But super top-ups are super cheap. Generally, they are just 10 to 20% of the cost of increasing your base policy. So if you take a super top-up of 40 lakh and let's say base cover is 10 lakh, then you can get a total coverage of 50 lakh at a very nominal cost. Now let's discuss how you can shortlist the right health insurer. Before we even get into policy features, the first step is to pick the right insurer. Because in health insurance, you want an insurer that actually pays when things go wrong, not one that traps you in paperwork and fine prints. So how do you shortlist the right health insurer? For this research, I have taken help from Ditto Insurance. That is our partner for today's video. Ditto Insurance is one of the most trusted platforms for health insurance guidance. They are genuinely trying to solve the problem of insurance mis-selling in India by focusing on helping people choose the right health plan for the situation. And unlike typical insurance agent, they don't spam you with multiple calls. They have simplified every aspect of health insurance, no jargon, no bias, no pressure to buy. If you need specific advice, you can book a free consultation and the Ditto team will help you pick a plan that actually fits your need. They even handle your claim process later on so you don't have to deal with paperwork or confusion. If you want to explore Ditto platform, I have provided the link in the pinned comment. Now the first thing you should check for the insurer is the claim settlement ratio. It basically suggests out of 100 claims, how many claims were settled by the insurance firm. For instance, on Ditto you can get the list of top health insurance companies with their claim settlement ratio for 2025. HDFC Ergo tops the list, followed with Bajaj General, Aditya Birla, Care and Niva Bupa. While it is an important hygiene check, the catch is you won't know how many claims were fully settled and how many were partially settled. That's where you should check claim complaint per 10,000 policies. If an insurer has a high complaint ratio, that's a red flag, no matter how cheap the premium is. The single metric will eliminate half the bad insurer. Then third, you should check the gross written premium. It is the total premium an insurer collects in a year that reflect its market scale and growth. This is a proxy for financial stability and operational maturity. A large insurer is generally better equipped to handle high claim volumes. Next, check the cashless hospital network. Here, don't just look at the 10,000 plus hospital marketing tagline. Look at which hospitals are covered in your city. Does it include budget, the mid-tier as well as premium hospital? Are good specialty hospitals also included? Here, Ditto team has developed an insurer rating methodology to evaluate each insurer. They are using 6 criteria and assigned a weightage to each criteria. Finally, the scores are standardized on a 5-point scale. So HDFC Ergo has the highest score of 4.95, followed with Bajaj General, Care, Niva Bupa and so on. Now let's look at the key features you must check before shortlisting a health insurance plan. The next crucial question is how to shortlist a right health insurance plan. Honestly speaking, most people choose the wrong health plan because they focus on lower premium instead of features that actually decide the claim approval. So if you visit Ditto website, you can get a health insurance checklist. Here must-have features include: first, don't split the bill. It means to avoid any co-payment clause. Co-payment clause means you have to pay a certain percent of health expense out of your own pocket. For instance, a co-payment clause of 20% means if your medical expense is, let's say, 2.5 lakh rupee, you will have to pay 50,000 rupee from your own pocket. Make sure you avoid it. Second criteria is check for restriction on room and room rent. Most people don't realize this, but room rent limits decide how much of your bill would get reimbursed. For example, if your policy allows you 5,000 rupee per day for the room rent, but let's say you choose a 10,000 rupee room. Now, if you remain admitted for 3 days and considering all the other expenses, let's say your total bill is 1 lakh rupee. Now, you might think that you only have to pay rupees 15,000 out of your pocket. That is the extra room rent for 3 nights. But the fact is, only your 50% hospital bill would get reimbursed because your room rent capping was 50% of what you have opted for. Shocking, isn't it? So make sure that there are no room rent restriction. Third, you should check for disease-wise sublimit. Even if you have a high sum insured, a sublimit can cap specific treatment like your cataract, joint replacement, maternity or cardiac procedure to a very small amount. When a serious illness strikes, these caps can leave you paying a large part of your bill from your own pocket. That's why checking disease-wise sublimit upfront is very crucial. It helps you avoid nasty surprises later and ensure your policy truly protects you when you need it the most. Then fourth criteria is opt for pre and post hospitalization care. Today, if you visit a doctor, the first thing that suggests before hospitalization is a diagnostic test. So ensure that your health plan covers both pre and post hospitalization charges like CT scan, MRI between 30 to 60 days before and after your treatment. Then fifth criteria is seek a low waiting period. Every health insurance has a certain waiting period for pre-existing diseases. For instance, let's say you are diabetic and opt for a health plan. Now, you can't expect your health plan to cover the medical expenses related to diabetes from day one. There could be a waiting period of as high as 3 years. So, if you have any pre-existing disease, then ensure that you opt for a health plan with lowest waiting period for that disease. Yes, you will have to shell out more money, but it is worth because there is high probability of having medical expenses due to that pre-existing disease. Then sixth criteria is coverage for daycare treatment. Daycare treatment coverage is crucial because medical science has advanced so much that many procedures no longer require 24 hours of hospitalization. If your policy does not offer daycare coverage, you may end up paying for expenses from your pocket. A good health insurance plan should cover all daycare or at least most daycare procedures. Then seventh criteria is ask for restoration benefit. This is a great feature for those who are looking for family floater plan. For example, let's say you have taken a family floater plan with a coverage of 5 lakh rupee and you ended up with a medical expense of 4.5 lakh. Now, what if your wife also ended up with a medical expense of, let's say, 2 lakh rupee? Since you have already consumed 4.5 lakh out of the total coverage of 5 lakh, you're only left with 50,000 rupee. How will it cover your wife's medical expense of 2 lakh? So if you have a restoration benefit feature, then your coverage of 5 lakh will be restored after you have claimed 4.5 lakh. It means you can again claim for 2 lakh for wife's medical expense. Apart from this, there are some good to have features that you can explore on Ditto website. Now, when it comes to health insurance for parents, it is one area where people usually realize the importance too late. As parents grow older, the probability of hospitalization increases and so do medical costs. The key challenge is premiums rise sharply with age existing diseases get excluded or come with long waiting period, and insurers become more selective. That's why the best time to insure parent is before they develop major health issues. If your parents are above 55 to 60 years, the priority should be a decent coverage, let's say 5 to 10 lakh, instead of a very high coverage, because premiums jump disproportionately after that. Then take a good super top up to extend the cover affordability. Also ensure that the health plan has reasonable waiting period and fewer disease-wise exclusion, since your parents are more likely to use the policy soon. And finally, ensure a high claim settlement efficiency, because any delay during hospitalization becomes extremely stressful. In short, parent health insurance is not about chasing the cheapest premium. It's about finding a policy that will actually pay when needed, with minimum restrictions and maximum reliability. Final topic I want to cover is whether company provided insurance are enough or not. See, company provided health insurance is helpful, but it is not enough for most people. And the biggest problem is people only realize this when they change jobs or face a medical emergency. Now here is the reality of company provided insurance. So first, your cover ends the day you leave the job. In case of resignation, layoff, sabbatical, job switch, you instantly lose your policy. Second, the coverage is usually too low. Most employer policies offer 2 to 5 lakh cover, which is not enough for a single major surgery in today's time. Third, in group policy, you cannot control the feature. Room rent limit, disease cap, waiting period for parents, co-payment, all are decided by the employer, not you. Fourth, there are no coverage after retirement. And after 55 to 60 age, buying a fresh policy becomes hard and expensive. If you rely only on corporate insurance and then retire, you are left exposed at the worst possible time. And fifth, you can't add long-term riders. No option for personal enhancements like super top-ups, no claim bonus booster or OPD add-ons. Here the smart approach is to use company insurance as a bonus, not your primary plan. Maintain your own personal policy with, let's say, 5 to 10 or 15 lakh base cover and then a super top-up plan, and let the employer insurance act as a secondary support. So to wrap it up, health insurance is not complicated if you approach it the right way. First, choose the right coverage, maybe between 5 to 10 lakh base cover plus a super top-up plan for big medical shocks. Second, pick the right insurer using practical checks like claim settlement behavior, complaint ratio, premium collected, and hospital network in your city. Then focus on the must-have features like your no co-payment, no room rent limit, no disease-wise sublimit, proper pre and post hospitalization cover, then short waiting period, then daycare coverage, and finally your restoration benefit for family floaters. For parents, don't delay their insurance. Their premium rise fast and restrictions become tighter every year. So get a decent base per super top-up as early as possible. And remember, company provided insurance is helpful but never enough. It can disappear overnight with a job change. That's it. If you follow this simple framework, you will end up with a solid health insurance plan that actually works when you need it without overpaying or getting stuck in fine print. For more details, you can check out Ditto platform and book a free slot with their advisor. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.